chew so loud, way. I'm gonna kick you in the face.
Hopefully this
We're live right now.
Catch it, dude.
Hey everyone, we are back on and live. Sorry about the technical difficulties that we had. Hopefully the quality is better now. We've switched phones and we have paused the Wi-Fi streaming. So hopefully it's better than it was before. I can't control the internet, so
yeah.
If it isn't better, our apologies.
We can always look at this going back though and see like how we did.
Yeah, I mean it's a good experiment.
Yeah, this is my first time ever going live, and I think
this is my second time ever going live, and the first time was just me holding a camera like this last week. So
experiment, yeah.
That's right, exactly.
Experiment with this stuff. But anyway, let's go back to the chat. Here we go. Joe Smith, do you recommend a 15-year or 30-year mortgage for a personal home? How hard is the real estate exam? I recommend a 30-year if you can get a low enough rate. I don't see there being any point in getting a 15-year at this point if you can just get a 30-year and pay off the minimum, as long as it's a decent interest rate. That's what I would do. I know up here you do
we do shorter terms up here. You can do like 7-10-year mortgages. Honestly, like it depends on your goals, right? I mean, if you're going to be selling your house in 5 years and upsizing, then you don't have to pay breakup fees if you can't pay the mortgage. So kind of it's situational. How long do you want to own the asset for? Try to line it up to that. I like shorter terms just because I tend to want to refinance the equity out of properties. I know I'm going to renovate them, I'm going to make them nicer, increase their value in certain ways, adding better tenants. So for me, I go like 2-year fixed instead of 5, and then I get the refi.
Yeah, that is true. That's true. I mean, if you're only going to have that house for like 7 to 10 years, there's no sense getting a 30-year. But if your intention is to hold it long term, get the 30-year. So. And how hard is a real estate exam? I mean, I took the exam in California. It was pretty easy. Yeah, if you want to move that over there.
Try to center us a little bit there.
Yeah, center us. There you go.
Hey, world.
It was really easy. I mean, I passed the first time, and I suck at taking tests. I studied the weekend before, and it was fine. But I think it depends on the state, too.
Did you hear what they're doing in Ontario?
No.
They're making it into a 2-year college program.
Are you serious?
Yeah. So you can fastest you can get your license is a year and something.
That's
you go full time.
Stupid. Oh my god.
Yeah, so you can't get your real estate license in less than 6 months. If you spend 100 hours a week, you still can't get your license for like a year. They're doing that to limit all the people in the industry just coming in fresh.
Wow.
Yeah, so Ontario, they're like squashing real estate agents is what I've heard. Fanshawe College, I think, is picking up the program on a 2-year program. And
that's stupid.
I was thinking about just getting it just to lock it in before they convert it.
You should, yeah.
Right now it's 5 3-week or 4-week programs or something. You can do it in like 4 months online.
Okay.
So a lot harder than in the States, unfortunately. But
that's so stupid. Yeah. In California, you go online and you take like all the
what if you got it in California and then transferred it here?
You can't transfer it.
Can't take it like a test?
Yeah, no, you can't transfer. It doesn't transfer. Otherwise, you would just get licensed everywhere.
Right? Just get licensed
every
in
state
like
is different.
Florida or something and bring it back.
Okay, no, every state is different. That's crazy. Yeah, no, California is so easy. You just go online, you take like all the tests, and you take a state test. You can do it in like 2 months. From start to finish. I mean, it's stupid easy, but that's why everyone has a real estate license.
Right.
So the barrier to entry is really low. So guys, smash that bell. Make sure to smash the like button.
Yes, please smash the bell, smash the like button. It's a brand new YouTube channel. I'm Mike Rosehart. If you're over here because, Graham sent a message to you on Instagram or Snapchat. Sweet, thanks for joining me. I hope that you come for him, but stay for some of the content. So, if you guys don't know about me, check me out in other videos. I'm 25. I'm, retired early / real estate investor.
Yeah, and we're gonna get you a better camera. We're gonna get some better backgrounds. She's gonna actually invest some money into this and make it a little.
That's right.
Yeah,
that's
up
right.
the quality a little bit.
Small notches. I think this is already an upgrade. We've got good lighting. We've got a board. This is an upgrade from me just holding my phone.
Yeah.
So,
I hear you. And then Terrence is gonna be at OREC. So absolutely, man. Just come on to us.
Yeah, we're excited for OREC 2018.
Yeah, no, I'm really looking forward to it.
That's this weekend, guys, so you can still get your tickets, I believe, if you reach out to, Matt or Jeff, or just hit up their website.
All right, 2018, I think there's a few more tickets left, so make sure you get your tickets before it's all sold out.
That's right.
So let's see, what else? No, so Trisha, is Meet Kevin in London yet? Not yet. I think he's getting in on Thursday night or Friday. So
yeah, just before the weekend.
Right, so he's only here for like 3 days, and then he's leaving. We tried to get him in a little earlier, but couldn't do it with his work.
Yeah.
Yes, he's
looking forward to meeting up with him too.
Yeah, it'll be cool. It'll be really cool. So Mike, you're 25 now. Did you just retire? It's all you, man.
I actually retired I pulled the plug and quit my job in management consulting, about a year ago. So I got to 15 properties in real estate, and then I sold off a bunch of them. So now I have 7 right now, but I had 4.
How'd you do that?
Build that whole.
Can you sum that up in like 2 minutes?
Yeah,
you can.
It's like the Burr strategy, the Rosehart real estate snowball.
Yeah.
Like essentially, I just
what do you do from the beginning to the end? First property to.
Okay, first property. I'm 19 years old. I'm in university. I'm in college. That's what you call it in the United States. Taking business, and my girlfriend and I, we saved up enough through scholarships, good summer jobs, good part-time jobs. I was able to grab that first half of the down payment. We came in together and bought our first property. I renovated it, made it nice, rented out rooms, and I did what's called house hacking. So I finished the basement, rented that out, and rented out the other rooms to buddies going to school. And so I lived for a net cost of 0. So that helped me get through school debt-free. I graduated at 21. I went to school at 17, graduated at 21 with an IB degree in finance and accounting, and then went to work at 21 in an IT consulting firm, and used all of my savings from that to buy essentially just more properties. And once you start buying properties, if you use the snowball, so essentially use the refi, right? You renovate the property, buy it below market value, renovate it, then use the refi to buy the next one, and then you start to use the cash flow from each property to then set up another down payment. You get something called the snowball, right? And so by the time I had 5 or 6, I could save a down payment every 7, 8, 9 months. And so it's just hardcore frugality and saving and working really, really hard allowed me to get, those jumps from 5, 10, 15. Now I've bought 20 properties probably in total. So probably $5 million in real estate in total that I've possessed at any given point. So now I sold a lot of it off, and now I have 7 properties and a bunch of money in the bank. And yeah, my wife and I and our daughter, we don't have to work anymore. So that's like the 2-minute.
If your daughter doesn't have to work anymore either.
No.
I know you're putting his 2-year-old to work. She doesn't have to work anymore.
Well, we did a little clip earlier, and she was playing with the money here, and she's
I guess one of her first words, like very early on.
Very clearly, I was emptying I had a bunch of coin laundry machines, and I brought home like a bag of like coin laundry. So we have like loonies and toonies in Canada. Yeah. So loonies $1, toonies $2. And so it's like this big bag of like quarters, loonies and toonies, and it was like probably $600 in coin, because that's what you can collect in about a month, this property. And I remember her pointing on the table, and she's like, ooh, and then like, that's money. And she's like, money. And it's been clean ever since, just money.
Yeah, it's funny, we were playing with bubbles, and she could barely say bubbles. She's like, bubba, bubba, but then like money comes out, she's like, money.
That's right.
Yeah, the distinction is very clear. She knows money.
More money.
Yeah. So anyway, next question. Do you feel like new real estate agents need to apprentice for the first year of their career? I would say it would really help. It really cuts down the learning curve dramatically to see what someone else is doing and to watch them firsthand and then to imitate what they're doing. And just being around other people who are busy enough to need an apprentice or need the help, it'll really cut down the learning curve. Because figuring it all out on your own, it takes some time. And there's a lot, like you don't have to reinvent the wheel. If you can just watch somebody else do what's working for them, you could just copy that. There's no sense trying to figure everything out on your own. So I think it's not required, but it would dramatically help out a lot.
In anything, in any business you're pursuing, in anything, I think it's really good to find good mentors. And that's how I would recommend, honestly, investing in real estate too. Maybe buy your first place to live in and you house hack it, but maybe your second when you partner with someone who's got 10 properties already, and you can get another mortgage, they're happy to get another property, and they'll teach you along the way. So sometimes partnering with people, joint venture partnerships with people you trust can be good ways to learn a lot too.
Yeah. All right, so the next question, will Kevin, I hate saying his last name, Paffraff is his last name. Just say, instead of saying Kevin Paffraff, just say meet Kevin. We'll meet Kevin be at Orec, yes.
Yes, he'll be at Orec.
Yeah, so make sure you get your tickets to see Meet Kevin.
You'll get to meet Kevin.
You'll get to actually meet
2018.
Kevin. You'll get to meet Kevin at Orec. So Joe, here we go. Joe again, will you be competing in any bodybuilding competitions with newfound gains? Yeah, I'm gonna be going for probably Mr. Olympia later on this year.
Change your last name.
Just trying to compete with that, and that'll be a good one.
We should have a backyard workout.
Yeah?
Yeah.
I'm
all about personal fitness, yeah.
You got weights back there?
Oh, I got dumbbells and stuff.
Really?
Yeah, we'll head out outdoor workout.
Oh yeah, we'll go live the next time.
Yeah, why not?
Go live. Live bodybuilding competition. Alright, okay, so Catherine again. Oh, I think this is for you. Did you live with your parents to help save money, or did you house hack?
So I moved out on my own at 16 with my girlfriend, and at 17 I went off to university. So I didn't go back in the summers. I never went back. I had a single family, we grew up single family below the poverty line. My mom didn't have a lot. I made more than she did at 17 or 18. So I didn't really come from a lot. So for me, moving away, moving to a new city, going to school was a fresh start for me, a chance to really kind of prove myself. So the way I saved money was house hacking. I rent hacked actually from 17 to 19. Bought my first house. You can see a video of it on that and check my blog out if you want to learn about. Rent hacking is essentially you rent a place for as low as you can and then you get roommates to try to reduce the cost. House hacking, same thing, just you buy a property and you live there for free because you're renting out portions of the space that you aren't even using anyway.
Yeah.
So like for instance, I have a tiny house, guest house in the back there that I rent out because I barely use it. So it generates another $1,000 a month to pay the mortgage. So
yeah. That's good. Let's see. And then how do you keep from burning out when you're grinding 24/7?
Yeah, I guess I'll go first. I know you're a hardcore grinder too, man.
You go first.
Okay, so I actually don't grind as hard now as I did, a year or two ago. If you guys check out me on Facebook, I used to do daily video journals, and you remember seeing some of those. Yeah. Like last year, I was in a really bad place.
Every day, right?
Yeah, every day I did a video. It was like 5-10 minutes or 2 minutes. And it was like literally me at like midnight, and you probably saw them because you're on a different time zone, but it's literally me at midnight coming home being like, I am exhausted. Like, been working all day, renovating like 3-4 properties at once, got guys working, and all these things going on, and balls in the air. For me, it's just about finding your purpose, finding your why. And so for me, it's been my family, and was reaching financial independence, and that was a huge motivator for me. Now I've reached financial independence, so I never need to really work. It's not about the money as much as it is about, giving back and really enjoying what I'm doing. So when I'm grinding now, it's because I'm grinding at things that I enjoy, because I believe it's going to make the world a better place. So it lines back to my why. That Simon Sinek, golden circle.
No.
I wouldn't say it's bullshit, but good stuff.
No, I get it. For me, it never feels like grinding. So like, because I hate working. Like, to be honest, I hate it. But so everything I do, it never feels like work though. So I think that's the biggest difference.
I wish I had.
Yeah. No, nothing really feels like work. Like the YouTube stuff, I enjoy. Like I'd be doing that regardless. So like that's not work for me.
You're editing a video and you're like, I love it. 2 hours in, you're like, you know what?
Yeah.
I love this.
Yeah. I mean, there are times when I'm like, man, it's a Monday and like I don't want to be doing this tonight. So there are times
over that.
I just force myself. But it's like I just the way I look at it is that like let's say it's 10 p.m. and I'm not in the mood to make a video.
Yeah.
I'm just thinking, imagine if I could snap my fingers and have it be like 11:15 and I'm done. I'm done filming. So I'm just like, okay, at 11:15 I'll be done. So like I'm just like from 10 to 11:15 I don't even think about the intro. I'm just like at 11:15 I'll be done with this. And that's it.
So it's visualization the whole time. You're like, find my happy place.
Like I'll be done in an hour anyway. So it's just like 1 hour. So like that's
pays off and then you're done.
And it works and then I'm done. But that's rare. I mean maybe once every 3 weeks that really comes out that I hate. Like I just don't want to do it. But then with working in real estate, it's like, again, that's never really felt like work. It's kind of like messing around.
And you're blessed. Since like 18, you've just been doing it.
Yeah, it's never felt like work.
See, for those watching, like what I did for 3 years, I worked in IT consulting, like as an analyst, senior analyst, and manager. I hated what I did. The 9 to 5 was terrible, and it motivated me. Like that's how I was able to get 15 properties in like 5 years, is because I just grinded hard.
Yeah.
Just from the it's like, when you're being punished, it can motivate you too, right? The carrot to the stick.
Yep.
So.
Yeah, very true. So the next one, let's see. So Terrence, I plan to leave Warwick with plans to get started as a 19. Can't wait to meet y'all. 100. Much love from Toronto. Looking forward to it.
Nice. Yeah, we look forward to seeing you. Hopefully you can come up to us and we get a chance to have a little one-on-one time after we, there'll be chances to network, so.
Yeah, okay. And then next, Christopher. Do you guys have a schedule for routine maintenance, such as changing out the furnace, filter, cleaning gutters, etc.?
Yeah, like I do, and I should stick to it. I don't always stick to it. Sometimes it's whoever screams the loudest.
Yeah.
Sometimes gets the first treatment. I know it's not a good way to operate, but yeah, there are schedules, like you're supposed to change your furnace filter every 3 to 6 months, and depending on the seasons. And
you are.
Most people don't. I don't always do that, but that's the recommended.
Right.
Gutter cleaning, again, I tried to keep up on it. But
yeah.
What about you?
No, I don't.
Just nothing.
Yep. If something breaks, I fix it. But like, if it's not broken, I just gonna,
If it ain't broken.
If it ain't broken, don't fix it. That's my motto. But no, I mean, if something breaks, sure. But some things they say they have a lifespan of like 5 years, but you can get like 10 years out of it just fine. It's just like the recommended. It's not broken.
Change the filters and stuff. It's 15 or something.
Yeah. True. True.
But you know what? He's hot so much it doesn't matter. You know, you're making kids like that. What does a furnace filter matter?
Yeah. Will you ever buy a Lamborghini, Graham? I'd want to. I think it's.
Yeah, where's the Lambo?
I wanted to invest. I mean, it's just like if I really had to think about it that much, if it was really the smart move, it's not the smart move. Let's be real. I don't know. I don't know how many views I can get versus the Lotus. So, by the way, with the Lotus, I rarely drive it. It's just a pain in the ass to drive. It's like it's in the garage. It's fine there, but like taking it out to driving it, like there's no. Sometimes it's just easier to just drive my other car.
Right.
I'm just not. I think if I did get the Lamborghini, I'm tying up all this money in the car. How many more views am I really gonna get?
Yeah, I don't know.
Tanner J. Fox got the Aventador SV, which is an amazing car. I mean, that's like a $500,000 car, and his views. You know, I know Tanner would. You know, instead of doing every day now, he's doing like 3 days a week. His views have gone down by like over 50%, 60%.
Is that because of?
Not because of the car, but the car has not helped him increase views, which I was surprised. Because I thought the car can get a whole nother segment in that's really interested in the car.
Why don't you just lease the car and drive it around and say it's yours? Use it for like 6 months.
You can't lease them for like 6 months. You do a lease takeover, but that would be like $4,000 a month. It's not worth it.
So it's not worth it.
Not worth it. But this other guy, ODI Productions or OD Productions is his thing. He does like drop shipping and affiliate marketing. He has the orange Gallardo Superleggera. That's how I found his channel. I think he had like 40K subs when he got the Lambo, and now he's at like 100 and something. And I found him through the Lamborghini. His videos are getting like a decent amount of views. So that's someone else where the Lamborghini really helped his channel a lot.
It's how you position, how you angle that.
Yeah. So I don't know. I concluded I don't think I'd be able to see the benefit in the Lamborghini. And also I've seen some people see they see the Lambo and then they feel like it's unattainable, or that it's like it's too much. Or if I'm talking about like living frugally and they're like, well, wait a second, Graham, you get the Lamborghini. And I don't want that to conflict.
Yeah,
I'm preaching like live under your means, and then like driving around a Lambo, and then I have to explain like, wait a second, it's not gonna. I bought it used. It's not gonna go down in value.
Right, you're holding your value.
Right,
yeah. You're justifying it with your real estate and YouTube.
Yeah. So maybe another year.
I think I could probably use my gold Ford Focus and position it in such a way that like I could get a lot of views on the frugal angle and like roll up with like the music cranking, put like my window down, be like, just check this sick whip, make it sound like
put a Lamborghini badge on the front. And that's it.
Right.
That's all you need, and then just put like an SB Roadster in the back, like a little badge.
That's right.
Done. Then put SB on the side.
It's all about the energy.
It's
right?
branding. Yeah, it's branding.
Yeah,
that's all it is.
If you believe it's a Lambo, maybe it is a Lambo.
Nobody has to know there's not a V12 under the hood.
That's right.
And you can get the scissor doors. There's scissor door kits.
Yeah.
You get for like $1,000. You do that yourself, and the doors open up.
I'll sweep out my Ford Focus out there.
Yeah.
Gets like 5 liters per 100 kilometers.
Done. All right. So another from Terrence. Mike, how many properties did you acquire before you could completely depend on your cash flow?
Oh, I'm super frugal. So like when I had 5 properties, I think I was generating enough cash flow that I didn't even need to work anymore. But it wouldn't be a lavish life, right? And I wouldn't be, the super conservative person in me is like, hey, I need to make sure I have enough and more than enough, right? So yeah, I guess the answer is 5 properties. But at 15, I was generating, triple what I need to live from the rental income. Appreciation was where I really made a lot of money too.
Man, I would have kept it. That's tempting just to keep it in.
Yeah, I was doing like with appreciation probably $20,000 a month.
Wow.
Like net.
Oh, with appreciation
gains.
though.
With appreciation.
What about without appreciation? Just the cash flow.
12 or 13.
You're making 12 from cash flow every month. That's crazy.
Yeah. London properties are totally different than yeah.
That's way more than I get, you guys. That's
because the cap rates, right? In London are so juicy. Like a $300,000 property. I had a $350,000 property that was renting for $5,000 a month. I had 2 of them side by side, so I was getting $10,000 a month in rent on these 350 and 350. So 750.
Oh my god.
Or 700,000. I think I put 50,000 in renovation. So 750. I'm all in. I'm bringing $10,000 a month in rent. Now, like my nail nut's probably 6.
Still,
because they were super efficient buildings, stacked in such a way that I regret selling. That's the one property like. Nicole, if you ever watch these, like I regret selling those 2 to you.
Why did you sell it?
I was just tired. I was at a point where I was just burnt out, and there was several days where I was just getting like dozens of calls. Things were going wrong. I had a leak in the second floor of a property that flooded, and I hired a property manager and fired them, and then I hired someone else and let them go too. And I was just having really bad luck. I had a lot of really bad tenants in some of these properties that I inherited. They were just souring it for the bunch. Like there was one bad tenant in the property, and they were always like causing issues for everyone else. And I'm getting calls all the time at like 2 in the morning. I just couldn't handle it. I just tired of it. I thought, when you get to a point where like, let's say you have like $1.25 million, that's enough to index. Like I could index fund that, sell everything, index fund it, get my 4 or 5%. That's $50,000 a year, forever, for infinity. So what's the need to work, right? What's the need to like deal with all these problems? And so I just thought to myself, the real estate market's doing really, really well in London. It's never done so well. Why don't I cash out? Little did I know it went another 10% after I sold, and so I left tons of money on the table. But you don't have a crystal ball, you don't know.
Yeah.
So I don't know. Yeah, I mean, so the cash flow is really good in London, and like that's why I bought some more properties this year. I had down to 4 in February, and I bought 3 more, so I'll be at 7.
Okay. And you're gonna keep those?
Yeah, I'll probably stop at like 10, like no more than 10, because I can't handle managing more than that like easily. Single family properties are totally different than like triplex properties as well. Like these ones had like 11 bedrooms in each one, so it was a real problem dealing with like 22 tenants, right? Yeah. Like 11 bedrooms is 22 people that potentially can fight, and the cash flows that like it's just dirty in London. You can really like have 5 properties and be financially independent here.
It's crazy, man.
Yeah.
Absolutely nuts.
What do you get? So give me an example. Give like the audience an example of what you get in LA.
LA. So if you want $5,000 a month net, that's probably you have to buy about $1.2 million in LA. That we net about 3 to 4%.
Okay.
That's about what it.
That's like the cap rate, 3.
Yeah, about 3 to 4%. But we make a lot of money on appreciation.
Right.
There's never any vacancies. You rent it out almost immediately. There's a line of tenants around the block waiting to get something.
But it's a lot more control. I hear like a little bit of that going on in California.
There is rent control. City of Los Angeles is rent controlled. So that's something that a lot of people are. But as long as you get market rents now and you raise the rent 3% every single year, you should keep on average about what it's worth. The problem is that people haven't raised rents since like the 80s, and then some new owner takes over, and they're stuck with like someone paying like $500 a month in rent on a $3,000 a month place, and you can't raise them rent.
Why wouldn't you raise the rent if your vacancy rate's like nothing? There's no downside if they leave.
Some landlords just don't raise rents. They're just mom and pop shops. They
raise your rents, guys. Like
you have to just to protect yourself, because otherwise you have a tenant like that who doesn't pay anything.
It's 1.8% is the maximum you can do in Ontario, I think.
Okay. Yeah. LA is 3%. So
definitely
it takes a lot more
increase
money.
those rents. I have the same kind of problems in some of my properties. It takes me a lot of money or a lot of time to get rid of these people that pay below market, and often those tenants are some of the worst. Smoking in units, and they have old grandfathered rules that really makes it tough as a landlord.
Yeah, and rent control. I mean, without going into too much,
we could do a whole video on that.
Yeah, I do think it's a flawed system.
Yeah,
and especially if someone, let's say, I think it almost should be like income based. Just spitting ideas out, but I have seen people on rent control that pay $1,000 a month, and they're making like $200K a year, and they just stay there because they know it's cheaper for them. Santa Monica is a big area for this, where you have a lot of these people who've been living there for a long time, or situations where I've seen like a parent will put their like the 18-year-old son on the lease, and this was back in like the 90s, and now the 18-year-old son is making a killing, he's making a fortune in some tech company, but he's on the lease, so now he's like has rights to that unit.
Oh, geez.
And it's like the landlord has to subsidize that, which makes no sense.
And so when the parent dies, the
the son is legally on the lease.
Hundreds of 100 years of that.
Yeah, potentially, and you can't raise the rent because it's unfair. But like, I get like the low incomeness, but then you also have low income people who prefer to stay low income, so they don't raise it on the rents because they know if like they make too much money, it's gonna end up costing them more because their rent's gonna. It's a whole flawed system. Definitely a flawed system on there.
We don't quite have that in Ontario to the same extent, so thankful for that. Any other questions from people?
Yeah, so the next one, we got quite a few. Graham, are you going to stay single forever? How do you fend off the gold diggers? So no, like this, it seems like this has been a question. So many people keep asking me about like my love life, my relationship life. It's not something I share. It's not something I keep. I had a girlfriend for about a year. I kept the channel about myself and finances. I didn't want to bring relationships into any of it. I never had a problem with gold diggers. Like, I don't spend gold diggers go for the guys that spend money. Like, come on, we're not the guys that are going to be spending money. Like, If me spending $5 at Subway is like a treat for myself, I'm not the type of guy gold diggers want to go after. It's not like they're looking at Graham and be, oh, it's $5 Subway sandwiches, let's go for him. No, they go for the guy who's going to be going out, like, you know, every weekend, getting bottle service, going on, like, trips, like, hey, honey, come along. Like, that's what they don't want the dude who's just, like, saving all of his money. And, you know, if she orders, you know, like, the dessert, you know, I'm like, whoa, we have dessert at home. Don't worry about that.
You're gonna spoil her with like $2 like ice cream at home.
Or like even drinks. So it's like, oh, you know, let's pregame first before we go out, so we don't order drinks there. They're too expensive. Or like, oh, let's get one drink here. Like what I've done before is like I save the drinks for a happy hour. So like anytime we'll go out for drinks or whatever, I'd be like, it would be during happy hour. So I'd always say, oh, let's meet at like 6:30 or like 6:45. Like happy hour ends at 7. So we'd be like, let's get there at 6:45 at this place, and you just order all the drinks up front. Happy hour.
Classy.
So you
that's how you avoid a gold digger is frugality. Frugality is just a huge bonus.
Yeah. So next question. Mike and Graham, what were some barriers you had to overcome before you could qualify for loans in the bank to purchase investment property? So I'll go really quick. For me, that was just getting a credit score. That was it. I didn't have any credit. The banks wouldn't want to lend me money. So that was my biggest hurdle, was actually getting the credit. And then after that, it was showing enough income, because in the very beginning, I was deducting everything.
Totally.
And when I went to get a loan, I qualified for less than what I thought because I deducted everything and I was showing less income, which is why I want to save on taxes.
Yeah.
But had I been able to show more income, I would have gotten a bigger loan back then, and I would have made way more money because I could have bought something more expensive that would have gone up more in value.
Totally. Yeah. For me, it's just establishing credit was big. When I bought my first property, I didn't have really stable income. I was a university student. I had a job making, I don't know, $18,000 a year. So it wasn't really a great income. It's tough to qualify. At that time, it's about finagling the story, all about the narrative. How do you convey to a lender that you're one of those people that want to take a risk on because you don't fit the conventional, you know, means of getting proper financing. So that was a challenge and a hurdle. Once I started buying properties, it actually got easier for me because I had all that additional income from the rentals until they saw my tax returns, in which case I claimed like nothing because I had so many write-offs. So yeah, it's a game, and you gotta learn how to play the narrative.
So Terrence also wants to know, why did you downsize instead of growing your empire?
I don't know. I'm conflicted on that one. Should I have? I don't know.
Probably should have.
Sounds like I probably should have. Maybe I should have. I just love buying properties.
If it were me, I probably would have hired a property manager, even if you had to pay them more.
I know, it's like, but it got to a point where like, if I did all of that, I ran the numbers, and if I like hired out property maintenance, property like proper property management, and I factored in them like their vacancy rates because they'd be shittier, and I factored in all the things that they would suck at and just not be as like good as me, right? And when I did all of that, I was like, well, assuming London like might have, and I thought London's also like a really high point.
Yep.
And it's still gone higher, but that's just the nature of bubbles. I thought, well, you know, maybe now's a good time to lock in like these gains. These gains are real. Like I have tangibly over $1 million here that I can access. And I couldn't really get access to that before, so I thought, you know, at the end of the day, if you factor in all those numbers, it seemed like the rate of return was like 9-10% on my capital. And I'm like, I have people I lend money to right now, theoretically paying 15% right now, and it's back to real estate. So, I mean, I make more lending to people than I do owning my own properties. Yeah. 15% on 1.5 million or 1.2 million or whatever is a lot more money than what you can make, you know, necessarily in owning properties. Cool. At the time, it was justified.
Yeah. So Sam wants to know, what's the best way to estimate the cost of renovations, especially on your first property? So for me, it's just getting a lot of bids.
Yeah, get a lot of quotes.
Oh yeah. So you have a contractor who goes in, who'll tell you exactly how much something's going to cost. And you have an idea. You look at other properties in the area, and you have an idea of what you need to do. If yours is a really bad kitchen, you're going to want to redo the kitchen. You see what other people are doing, and you copy that, and you get some bids. So you should know before you go into it how much it's going to cost.
Yeah, I agree, 100%. And the more you do it, the better you get at knowing. You know, I know what my 90 cents a square foot my guy can install for. I know I can buy it at $1 a square foot. So I know it's cost me $1.90 a square foot for flooring, for instance. That's just something that like, now I have that quick mental math, and you can borrow those online. You can go online and find those costing numbers and use that. Yeah, as your base.
And then after a while, you just know, like you'll be able to look at a place for 20 minutes and be like, all right, it's going to cost about X amount to fix because you've done it in the past. But that just comes with experience.
100%. How are we doing for subscribers? We have,
I don't know.
People in?
People are in. So Terrence also wants to know what else do y'all invest in besides real estate, stock, commodity, etc. For me, I just invest in Vanguard index funds. That's it. So it's just real estate and Vanguard index funds. There's nothing else I invest in.
You at least diversified with Vanguard.
Oh yeah, and crypto. I have some money in Nano, which is just like, it's kind of shit, but oh well. Oh well. So
yeah, myself, it's, you know, same kind of thing, real estate, and you know, I have some investments in equities, and I do a little bit of hard money lending as well, private lending as well. So yeah.
Cool. And then Jeff is currently house hacking as well, which is awesome.
Nice. Way to go, Jeff.
And
house hacking is key. That's how you retire early, is you keep your costs low, right? There's 3 ways to become wealthy, right? You spend less, you earn more, and you maximize your returns. That's it. Those are the only 3 things you can do.
Right. And then, Michael J. I don't know why it says your message was retracted, but if you're watching this, what's up, man? So let's see. So Sam, what is the best way to grow your YouTube channel when you're just starting out? Honestly, it's consistency. I think it's really it. And I do feel like, you know, we tried to do our best with this, given the, you know, I think a good background makes a big difference. Good quality makes a difference. Good audio makes a difference. I think all of these things, within the first few seconds, if it's not good, people are more likely to click out. So I think it's a combination of having good quality, being interesting, having something to say, getting to the point, which is a thing that too many people ramble without getting to the point, and you're just going to click out of that. And being creative and coming up with like good titles and thumbnails that are going to be clickbaity enough for people to want to watch, that are on topics that people want to watch, and it's trying your best to really carve out a niche that you like and that you think people will want to watch at the same time. Like, you know, you can be really specific with it, like how to get listings in Los Angeles, or like, you know, as a real estate agent, but nobody's going to really want to watch that. Instead, you want to be like, how to get your $1 million listing, you know, in 30 days, just something like that. So that, like, it has to be a little clickbaity, a little pushy.
So you're saying target the general audience, or do you with a specific niche?
I like to be as general as possible, because I feel like it appeals to the widest amount of people possible. There's only so much you can do if you grow a niche, though. Like, at some point, you just have to expand out of that. Like, I remember Matt in the very beginning, his initial thing that, you know, I don't want to call it wasn't a problem. He was going very niche on London, Ontario. Right. And it wasn't until he started, you know, branching off of, like, you know, financial independence and real estate investing, this channel really started to see some traction, because he was just too niche. Nobody's searching London, Ontario. Right. Like, you know, wine shops or stuff like that. And those are the videos he was doing versus investing in general. So.
Yeah, good points. I'm new, so I can't really comment on that too much. Seems like consistency is pretty important. So.
Okay. So Terrence again. Mike, I'm currently in the same situation as a student making part-time money, roughly $15,000 annually, but I live pretty frugally. How did you convince the bank to take a risk on you making $18,000?
I got accepted to the Richard Ivey School of Business here in Canada. It's one of the most prestigious business schools. So they offer like an automatic line of credit for $75,000, the same as they do med school and dental school. So I used that and asked if I didn't need that, if they would be willing to, instead give me a mortgage for my first property. It's about $200,000 purchase price, and so I was able to kind of finagle through that. I also had a job as a teller at a credit union, and I got a tip to talk to someone who might be able to work with me. And so it was just about finding the right person. I had like 7 no applications. I probably put in like 100 applications for mortgages, and you know, got like a dozen or so. So 1 in 10. So if you hear no the first 5 times, keep trying. There's always an angle. There's always a way to make it work. Sometimes you might have to start with a B lender to get the property, and then after you go is refinance. So a lot of strategies.
Cool. Next one. Did you ever get crap from your relatives or friends for being so frugal when you were starting out? I still get crap.
Yeah, I still do.
Nothing changes.
Yeah, I mean, people don't like people who are frugal. They like people who are spending.
I think it's like in a joking way. Like, I get friends that give me shit all the time.
Yeah, oh yeah.
But it's more like it's a fun sort of way. Like they make fun of me as being like the cheap one all the time. It's always a cheap one. My thing though that I've always done is giving away secrets here.
Water's all around.
Secrets. No. Water's all around. No. So a lot of my friends, and none of them are watching, they're never going to see this, but I will always go out to dinner. Like, I'm not going to not go out to dinner with friends and stuff like that, but I typically either won't get something at dinner or I'll get just like a cheap appetizer and I'll just say something like, you know, I've eaten early, I've eaten before, I'm not that hungry.
Yeah.
True, usually.
Yeah.
So I get my appetizer. Well, the thing with them is that they always have food left over that they don't finish. So always at the very end.
Dude,
always.
That's dirty. I love
always
that.
At the very end, like, you know, they're half eaten like all these plates. And then, like, you're done with that. They're like, oh, yeah, you want some? And I'm like, yeah, let me get some of that.
Yeah, they make fun of you so hard about it, I'm sure.
And it will, I've done it so many times. I don't know if they anticipate it now, but no one said anything yet. No one, like, I don't think they know yet. I think it's so ninja level, they don't know. So now I got, like, 6, 7 friends who have eaten meals. Like, I get a little bit of everything. They were just going to throw away. Like, I understand. If they're gonna take it home and eat it later, I won't touch their, like, out of respect. But if it's literally, like, they're going to take the plate away and throw it away, or I'm going to eat it. What do you think? I'm going to eat it.
I think I would take it too.
Yeah, so I've been able to get, like, you get steak dinners, fish dinners, sushi, like, you name it, like, decent places. And, you know, it's like, oh, I'm just finishing off.
Graham's sitting there with his water waiting for everyone else to eat. He's like, oh, I'm so hungry.
The only thing is, it's a race to finish, because by the time you're eating, everyone else is already done. So now it's like, you get the time to eat between when they're finished and when the check is paid. So, like, you have the little window right there, which is usually like a 20-minute window anyway. But
I like that. I actually like that. I'm like the most frugal guy that I know. And like, you talk to like Matt and Jeff, and they're like, Mike, like, you know, Graham's pretty close to your level of frugality. I don't know if
they were telling me that, because when we went out, we just got like waters all around. I felt bad. Like you got, I think with a table of like 8, we got like 1 sandwich and then waters all around.
Yeah.
For like 8
That's why
people.
they kicked us out.
Yeah. But like that's like I relate to that. They're like, oh, Graham, that's something you would do, and I'm like, yeah, it is.
Yeah, I'm like, you know, affectionately between my friends known as like the cheapest guy, right? So.
Yeah. So anyway,
What's the
okay.
next question?
So from Michael here, Graham, Mike, I was curious about that rent-controlled home. Can landlord sell the property, or is he stuck? The thing is, he's stuck. He can sell it. He's selling it though, subject to the tenant already living in there. There's nothing he can do. You can't get the tenant out. And the new owner assumes the new liability of the tenant.
Yeah.
I wish there were more. Like, what you can do is usually you can offer, like, to buy out the tenant. It's at the tenant's sole discretion, though, especially if they've been there for such a long time and they're what's known as a protected tenant, which means they're over the age of 62 and they've been there for more than 10 years. They become protected. You can't kick them out no matter what. So they can pretty much ask whatever amount they want. There was one unit. This is in 2012. I wanted to buy this unit. It was in Santa Monica, a block away from the beach. Not even, like, the unit was here, and then, like, the beach was, like, just on the other side of the street.
Jeez, that's good.
A 1-bedroom condo in Santa Monica. They were trying to sell it for, like, $400,000. Every other unit in the building for the 1-bedroom was selling, like, $600 to $650. They could not sell it for $400,000. And the reason why is because the tenant had been there for, like, 30 years. Was in her 60s, healthy, would go to yoga every day, eat like all organic foods and this and that, did not want to leave. The landlord could not get her out. Yeah. And because of that, the owner...
You need like Eastern European like landlord to take over.
The thing is this, is that the tenant was paying somewhere like $600 a month or something like this. The overhead on that unit, the HOA alone was $600 a month. So this guy's losing money every single month that this tenant lives there. She's living there on this owner's dime. The owner offered her $100,000 to leave, and she said no. She said no.
For $100,000, I mean, there are other ways, I'm sure, to
she
like
said no.
Gas the unit or something.
Yeah, but no, she didn't want to sell.
I'm joking.
Yeah, but I mean, he could potentially offer her up to $250,000 to leave, because that's what he would get anyway for the unit. You know, she didn't want to, I don't think for any amount of money. Like, maybe you give her like $1 million or something that she'll leave, but she didn't want to leave. And he actually let the unit go into foreclosure because he couldn't afford it. It was the bottom of the market, and he's losing money. He's bleeding money every single month because the tenant didn't want to leave.
I just saw a property like that.
Yeah.
The day after you come out, we went and looked at a property, and it's in foreclosure.
Yeah.
And they're like, yeah, like our landlord, this and that, what a loser. I'm like, what are you paying? Like, oh, like $900 a month. I'm like, for this house? Like, for the whole house?
Yeah.
Like, there's all these guys living there. I'm like, no, like, of course, his mortgage and property taxes are higher than that. No wonder he let it go into foreclosure.
Yeah, but it made sense. Like I can't rationalize that. that you can own a unit and be at a loss, and subsidize the tenant living.
And the government supports that.
Yeah.
Like the laws.
I think that's flawed. I definitely think there's a flawed system. I don't know how you make it right. Like there's so many variables with that, and like you don't want people to necessarily get kicked out of their homes, but at the same time you need to be fair to. Well, you need to be fair. You know that's it's a delicate situation. It's very delicate. There are a lot of different perspectives and opinions.
That's right.
That you need to take into account.
I think in those extreme cases, there should be a right to evict for a certain price. And that's it. Like, there's a price. Like, maybe it's like you subsidize the rent of their new place for like 2 years.
I think it should maybe be like every single year that there beyond a certain year is like X amount of dollars. Like, let's even say it's $1,500 a year for every single year you're there. Like, that way there's at least a guaranteed buyout. They've been there for 30 years, they get 45 grand or like something.
Right.
But I don't know.
If you subsidize a new place, it's no difference. Say, look, I'll pay you to live somewhere else.
Yeah, but the problem is then that, but if they're there for 20 years, 30 years, it's the same thing. It could get very expensive.
Yeah.
So, anyway, that's that. Do you guys have any thoughts on REITs?
Yeah, there's some good private REITs that I've looked into here in Canada that some of them pay really, really well. There's private REITs and public REITs if you're an accredited investor to invest in private REITs in Canada. I don't know about the United States.
Same.
Okay. So typically what you'll find is that essentially the REIT has advantages like it has economies of scale, it's managing hundreds of units, it's got good systems in place, and you don't have to do a thing, so it's entirely passive. But in theory, they're more efficient than we can be with a few properties because they have so many. They can get better deals on trades, better negotiating power on materials, et cetera, because they have the scale. That said, they do have, to pay off, certain, management takes a good chunk of that, right? So you got to pay management. There are pros and cons. The rate of return should be theoretically slightly greater from economies of scale, but then the management tends to, and the public listed companies have a lot of hoops they have to jump through, so that ends up costing them quite a bit. So public REITs I find don't perform as well as owning like good properties yourself. But if you don't know anything about real estate, you've never invested in real estate before, you're just gonna buy a Joe Blow house, you might, if your profile is such that you don't want to manage tenants and deal with those problems, you might be better off with a REIT. There are some REITs that pay like 10, 12% a year plus appreciation, or 10% a year plus some appreciation. So you can do very well with a REIT. That was my thinking when I sold some of my properties, was that I could just put it all in REITs and get the same rate of return as if I outsourced everything, because my portfolio was small enough and I factored in some bad employees and things like that.
Yeah.
And bad debts.
Yeah. I don't see the point in REITs, but I have a video on it. So check out my video, invest in real estate for $100. That's my REIT video. I go over it's like a 15-minute video, the pros and cons of REITs.
You gotta be very careful. Like there are a lot of bad REITs out there too, so that's something to consider.
So that's
REITs,
my video.
REITs have outperformed the S&P 500. I can show
recently. Not historically.
In like a 15, 20 year period, there's an article I was reading. They outperformed the S&P 500.
With dividends reinvested.
With the distributions paid out by the REIT, reinvested and dividends reinvested, yeah. Real estate outperformed. I'll send you the article. I was reading. I don't.
Over the last 15 years, you're probably right, because the last 15
years, 15 or 20 year period.
Terrible for the stock market. They've been terrible and decent for real estate too.
Yeah, so. Theoretically, I think real estate was outperforming I think it was like the 90s to today or something.
Yeah. But Sam, I already made a video on it, so it's already on my channel. It's one of my last like 5 videos. You'll see it. It'll be like real estate for $100 is the title. Just make sure to watch the video and hit the like button. So Jeff, what about have the tenant move out and tell them you need to do need it vacant to do major renovation? You're not going to get the tenant out for renovation.
There's almost no way to get these guys out.
No, you can't. Otherwise, everyone would be doing that. The only way to do it is there's something called the Ellis Act, which is big in LA, which is where you buy the entire building and you want to convert it to condos. You can legally evict tenants, but not in a condo building. If they're living in a condo, you can't do that. Even if you go and say like you want to remodel the unit, you literally have to remodel the unit and then go to court for them to come up with a fair and a reasonable like rent increase for the upgrades. But you can't charge market rent, so you can go and spend like 50 grand on the unit, and they'll be like, okay, well the tenant's paying $500 now, so now to be fair to the tenant, like they'll pay $600. Like you're never gonna get the ROI, and you have to go to court and get that. It's just not worth it.
In Ontario, there are things you can do. Like you can do that, and you get them out, and you do the renovation. You drag the renovation on long enough, they find a new place that they're living, and they don't move back in your place because they're locked in a lease somewhere else. So that's something you can do in like Ontario that I've heard work.
I don't know, but
the tenants just don't take you up on it. They don't move back because it's too much for them to leave their place where they've been staying.
Then you have to compensate them for that.
No, so like they're yes and no. In Ontario, it's not as bad. So in Ontario, you can do that. You can get away with certain things like that. You can also move into the unit and pay them a certain fee to live in the unit. We have different laws here in Ontario that it's still a pain, but.
All right, so Catherine noticed the fireplace is frozen. So yeah, so we were worried the first time we did this. We thought that this was affecting the live stream in terms of Wi-Fi because we were streaming this in HD for you guys. Yeah. So instead, we have a nice frozen fireplace here with a little loading thing.
And a pile of cash.
Oh yeah, if you didn't see, we have the pile of cash here. So just for
and a board for ideas if you want to ask questions on certain topics.
So Terrence asks, are you able to support not only yourselves but your families as well? No, I'm able to support myself.
You are yourself.
So, I am myself. I am my own family. Yeah, so you support family. I support myself.
I support my family.
Dogs, I don't have anything. It's just me.
Yeah, my daughter and my wife. We are well taken care of. 3 times over. I'm retired at 25. I never have to work another day, but I do it because I love it.
Yeah. All right, so Catherine says, I'm interested in renovations that are worth it. For example, I have a nice carpet in my property, but is it worth it to replace all with hardwood floors now, or do I wait? I would wait until you have a vacancy and then do laminate floors.
I'm a big fan of vinyl plank floors, like PVC material.
Yeah.
Because it, water gets in the laminate cracks and it can come out.
Oh, interesting.
Whereas the vinyl never will. You could pee on the floor and nothing happens.
Really?
It's indestructible. You can't scratch it. There's some really good quality.
Luxury
vinyl plank looks just like that.
Yeah.
It's pretty sweet stuff. I'm a big fan of PVC or luxury vinyl plank flooring. Similar price range. Clicks together. Similar installed laminate.
Yeah.
It's great in humidity. Yeah. Humidity environments too.
Yeah, I didn't know that. So there you go. So that's what I would do. Carpet, I just don't like carpet. It gets dirty easily. You have to replace it after every tenant.
I remove all carpets from all my rental units, always.
Yeah.
So much work. That. Sweeping's way easier than vacuuming.
Terrence, do you believe post-secondary is necessary to excel in real estate, or is there no correlation? Could I drop out and still do well? I think you drop out and still do well.
I think so too.
So.
There are advantages, but not for the cost.
Yeah, okay. And then Christopher asked, do you guys use the cheapest renovations materials when doing renovations? Secondhand appliances, the cheapest laminate, paint from Habitat for Humanity. I'm going to put my phone because my phone's almost dead. But I go middle ground. I don't use the cheapest because I feel like that might not last as long.
It depends on for me. It depends on the situation. If I have a unit that's I'm only going to own it for a couple of years, I might only put in a product that's going to last 5 or 10 years. If I know if I got a bad tenant in a property and I know they're going to destroy it anyway, I might do a renovation with material. If they make me renovate something in the unit where they're living there and they want the tenant, to eventually leave, then it makes sense for me to, put in maybe a cheaper material. But I tend not to cheap out because you're going to pay for it long term.
Yeah.
Use quality, at least find quality materials for a lower price. That's the key thing at the end of the day.
Matt does secondhand appliances though.
I do too.
Yeah. Which I think is fine. I think if you get good secondhand appliances, because as soon as you use them anyway, they're used.
For $250 to $300, you can get a fridge, and it's a new one's $1,000. Yeah. It could break 3 times, and you're still good.
Yep.
I could replace it 3 times over.
Yeah, no, I agree with that. So I think secondhand appliances, by all means, do it.
Yeah. You just gotta look at the cost, right? And what's the life of this item? Is it gonna last me 10 or 15 years?
Yeah.
Or is it gonna last me 5? This laminate. So do the math and find out when you amortize it over a longer period, is it worthwhile or not?
Yeah, I agree.
But, cool. Yeah, we should probably wrap this up. We've been going at it for a while.
Let's do it again.
Yeah, we should. I was thinking about doing I'm gonna ask the audience. What do you think? Money Mondays or Wealth Wednesdays or Wise Wealth Wednesdays? What do you guys think? Is it better for you guys to do a weekly live Mondays or Wednesdays?
Or do Tequila Tuesdays as you're taking shots of tequila?
There you go. I could do that. I'm not a huge drinker, but
you will be on Tuesdays.
For the right audience, sure.
Cool. Well, good. Well, thank you guys. I really appreciate it.
Thanks for coming on today.
Yeah, of course. Well, this is fun. So, cool. Thank you guys.
Thanks everyone for tuning in. Cheers.
See ya.
Spend less, earn more, and maximize your returns. Unlock financial independence. Boom.